What are some stocks that you guys should be buying for the middle of July 2020? In today's video, I will break down my top 5 stock picks for the month, and after doing some further research and examination, I believe that these are stocks that you guys should keep an eye on if you are looking to make money. This year has been absolutely hectic in terms of market volatility and market sell-off, in which we saw some of the fastest market declines in history when the pandemic arose, but for the past few months, the market has just been in complete rally mode, and we're starting to approach levels in the S&P 500 and the Dow Jones that we haven't seen even before much of this happened. Don't get me wrong, there's still lots of market volatility, and it's possible that we see a second wave of this illness hit towards the fall and the winter, but even throughout all of this, the Nasdaq has still been able to approach and climb new all-time highs. It seems like almost on the daily. This year's market fluctuations have created some big problems in making rigid distinctions between what are actually growth stocks and value stocks, and 2020 has also highlighted the incredible momentum and market-shaping power of the technology sector. Despite playing host to many companies with highly growth-dependent valuations, technology companies have proven more resilient than any other industry amid the uncertainty and volatility created by the pandemic. If we dive in and take a look at how the Nasdaq has performed through this recession compared to the S&P 500 and the Dow Jones, to put it into this perspective, the Nasdaq has taken a huge hit along with the S&P and the Dow, but unlike those two, the Nasdaq has really thrived and has been able to climb to new all-time highs, while the S&P and the Dow are still trailing below their previous respective all-time highs. High-quality tech companies that can really shape and benefit from influential trends have the possibility to post huge growth over the long term. These are companies that I really believe can deliver big growth and thrive through adversity, and the first one that you should consider adding to your portfolio is Netflix, ticker symbol NFLX. And yes, I know, before you guys criticize this one, this stock has grown a ton as of late, but they are the world's leader in entertainment streaming, and I really do believe that Netflix is just getting started in terms of future growth that lies ahead for this company. This company did have a little bit of a pullback in the middle of last year, but ever since then, this company has just continued to keep increasing in value. 2019 was a huge year for Netflix. They saw an increase of 20% in their subscriptions, moving that number to almost 170 million users of Netflix total. The company was also able to increase their revenues by 31% throughout all of 2019, which is phenomenal growth. And Netflix has really been on fire to kickstart the year, because after quarter one earnings, they added a total of 10 million new subscribers to their platform, pushing that number to almost 180 million total Netflix subscribers. And Netflix is also set to report quarter two earnings on July 16th, which is towards the end of this week. An issue that Netflix does have is their low profit margins when compared to other huge name streaming services like Hulu and Disney+, but Netflix definitely has the potential to increase these profit margins over the next 10 or so years. Netflix is spending a lot of money as of right now in order to create new content for their platform, and I definitely believe it will pay off with all the new subscriptions they will have, even though Netflix's price to earnings ratio is pretty high and the company may seem overvalued at the moment. Considering that their revenues and profit margins will increase, it doesn't make the company seem too bad in terms of value right now. You also have to question the future of traditional movie theaters and people actually feeling comfortable enough to go out for entertainment when people might just rather stay at home and have like a date night on Netflix or something. The whole pandemic is definitely going to change the way everyone lives from now on, and it is forcing companies to have to adapt to consumers' wants and needs. So even though Netflix might have some price drops in the short term, it is definitely a great company to invest in for the long term. So next up on my list is Upwork, ticker symbol UPWK. I've mentioned in some of my previous videos how I sell some of my work on services such as Fiverr. Upwork is similar in terms of an online marketplace that provides businesses with the ability to find, hire, and pay freelancers for short-term or longer-term projects. The company Upwork itself is composed of constituents that its marketplace offers, such as Upwork Basic, Upwork Plus, Upwork Business, and a few others. In my understanding, this company has tons of potential from a qualitative standpoint due to the demand for working jobs remotely from home steadily increasing. Over the past year, this company's stock has been in a downtrend, but there's been some signs of a reversal that just started this past April, which is indicating that this company might be ready to make a run towards the upside. This company does not pay a dividend and they have not been profitable, so there's no PE ratio to go off of to base potential future growth. Personally, I always like seeing how these companies are analytically rated, and according to BTIG Investment Banking, they believe that Upwork's potential is underappreciated, and due to current economic conditions, this will allow Upwork to grow revenues in excess of 15% over the next 5 years. With the increasing amount of cases, many investors are looking at companies such as Upwork that are able to adapt to this new type of economy, but Upwork does have some roadblocks ahead of them, such as heavy competition from websites such as Fiverr, and the fact that this company has very small margins and they have not been profitable since their initial IPO in late as of 2018 does make some investors feel quite uneasy. However, during Q1 earnings, Upwork's revenue increased 20% to over $80 million. So for the third one on my list, this company is Etsy, ticker symbol ETSY. And Etsy is a leading e-commerce marketplace that allows people and small businesses to sell everything from clothing and jewelry and art and decor, and their technology platform also allows sellers to manage and scale their business online. Etsy initially IPO'd back in 2015, and ever since then, their shares have soared an amazing 1,200% since the start of 2016. Etsy has also been a very popular online destination in recent years. When trying to distinguish a strong candidate for long-term growth, it's really important to consider the many factors that are in play when trying to determine if a company will financially succeed, and Etsy stock really attracted my attention due to outperforming the S&P 500 by 137% year to date. And on top of the technicals, it's also really important to dive into a company's fundamentals to support a long-term investment. And with Etsy having a 3-year sales growth of over 31% and a 3 years earnings growth of almost 9%, by the looks of it, Etsy's numbers have been really impressive. In the first quarter, Etsy's sales jumped by over 35% alone, and Etsy was reported to have sold over 12 million masks, estimated to be worth $133 million, or 10% of total gross merchandise sales in all of Q1. Like, hold up, we gotta stop that, because when I read that, 10% of total gross merchandise sales in Q1, like, oh my God, you have to think about how much that is. That includes all these big names as well, like Amazon, Shopify, eBay. Like, damn, if I sold just 10% or even just like 1% on the Shopify store, I'd probably have like so many like Lambos or houses or all of this right now. Like, it's crazy, but I see the hustle, Etsy. I respect it. But in all seriousness, this could be really good news for Etsy because masks might be needed for a long time from now, and it'll really encourage other buyers to start buying other products on Etsy's platform as well. Looking into the next quarter, Etsy's Q2 sales are expected to increase by 81%. Meanwhile, Etsy's adjusted Q2 earnings are expected to jump 186% to 40 cents a share. And if we look all the way until 2021, Etsy's adjusted earnings are expected to climb another 44% higher, all the way up to $1.61 per share. Number 4 on my list is going to be Zenga, ticker symbol ZNGA. And Zenga is an American video game developing company that runs social video game services. Their primary focus is on mobile and social networking platforms, and with the demand for interactive entertainment increasing, it makes Zenga look like a very safe buy as of late. They have developed very popular games in the past, such as Farmville, and from the looks of it now, it looks like Zenga is really ready to reap the rewards of their savvy business move they made over the past few years. Last month, in the beginning of June, Zenga has made its biggest acquirement to date. They were able to purchase Peak Video Games in a $1.8 billion deal, and by doing so and combining the gaming developers titles, Zenga believes that they will be able to expect their mobile daily active users rate to increase by a total of 60% 20%. If Zenga can successfully pull this off, as it has done in the past with several other gaming companies, the business should see major new growth headed its way. Not to mention that Zenga does have $500 million in cash just sitting around waiting to pursue new assets if interested, and over the past 5 years, Zenga has had steady growth with posting an over 250% return on their stock since 2015. Zenga looks like it's back to posting consistent profits, and shares trade roughly at 30 times this year's expected earnings. As of now, the stock is trading for under $10 a share, but it could soar to even newer highs if the company's new titles prove to be gaming hits. Finally, my last pick for this list is going to be Shopify, ticker symbol SHOP. Shopify operates an online cloud e-commerce platform that is designed for small-sized and medium-sized businesses. This software is used by merchants to run businesses across all sales channels like web, tablets, social media storefronts, and much more. This platform is the go-to to when people want to take a business online or operate their own online stores. So first off, Shopify has not been profitable, so there's no current PE ratio to go off of to base any future potential growth for Shopify, which makes defensive investors really uneasy about buying any Shopify stock as of now. But you have to look at the future potential growth for Shopify. Shopify is the king of e-commerce, and the pandemic just made it that much more favorable for them, because when businesses needed a way to scale their business online, Shopify was the front runner that most of them turned to. Shopify has spent a lot of money in marketing and acquiring new business, and as more people transition their business online, it's only going to get better from here for Shopify. Even before the pandemic, many retailers and businesses were already making the transition to online, and with the new way of life and the way the new economy is set up, it's almost going to have to be that way, where businesses are going to have to be moved online. So in my opinion, Shopify definitely has the potential to be sort of like the next Amazon. Shopify doesn't sell directly to consumers as Amazon does, rather than it's going to help small businesses do so. So at this point, any company that's not Amazon is a potential Shopify customer, and Shopify isn't just an e-commerce platform anymore either. Their new launch of the Shopify fulfillment network is a direct hit to Amazon, because like Square, Shopify can launch new features, creating what is a truly one-in-all package for any company looking to sell online. That's gonna do it for my stock picks today. I really hope you guys enjoyed today's video, and if you want to claim your one free stock, make sure to hit the link down below in my bio and sign up with Robinhood. It's absolutely free to do so, as well as drop a like on this video and subscribe if you guys want to see more content like this in the future. I'll catch you guys in the next one. See ya.